everyone, and welcome back to the channel. Ever wondered how some companies manage to not just survive, but truly thrive in today's fast-paced financial world? Well, today we're taking a deep dive into IFAST Corporation, a Singapore-headquartered fintech company that's been making some serious waves, especially in the first half of 2025. We're going to break down their impressive growth, what's fueling it, and yes, even the bumps they've hit along the way. So if you're curious about a company that's all about helping investors around the world invest globally and profitably, you're in the right place. Before we jump in, a super important reminder. This video is for informational purposes only and is not a recommendation to buy or sell any securities. Always do your own thorough research or consult with a financial advisor before making any investment decisions. Got it? Awesome. Let's go. First off, what exactly is IFAST? Think of them as a global digital banking and wealth management platform. They're essentially the backbone, connecting fund houses with everyday investors, making their money primarily through transaction fees and platform charges. Their reach is pretty wide too, spanning key markets like Singapore, Hong Kong, Malaysia, China, and the United Kingdom. IFAST's business model is built on three main pillars. Wealth management. This is their core, offering everything from unit trusts to equities and bonds. It's their foundational platform. Digital banking. This is run through their UK-based IFAST Global Bank, or IGB, which they acquired in early 2022. It's all about global banking services, multi-currency accounts, and fixed-term deposits. And finally, e-pension services, a huge strategic initiative, especially prominent in Hong Kong with their involvement in the eMPF platform. This isn't just about having multiple business lines, it's about making them work together, creating a powerful, interconnected financial ecosystem. Now, let's talk about the numbers for the first half of 2025, because they are pretty impressive. IFAST has demonstrated robust financial performance. Net profit? It's been soaring. In the first quarter of 2025, net profit jumped by 31.2% year-on-year to $19.04 million. And in the second quarter, it surged even more, up 37.9% year-on-year to $22.11 million. For the entire first half of 2025, their net profit grew by 34.7% year-on-year to $41.15 million. Revenue? Also on a strong upward trend. Gross revenue increased by 24.4% in Q1 and 28.3% in Q2. But here's a massive one. Assets under administration, or AUA, this is basically the total value of assets they manage for clients. It hit a new record high of $27.20 billion as of June 30th, 2025. This wasn't just random luck. It was driven by record net inflows of $1.29 billion in Q2 alone, contributing to a whopping $2.23 billion in net inflows for the first half of the year. And get this, the total number of customer accounts surpassed 1 million by the end of June 2025. That's some serious market penetration. So, what's fueling all this fantastic growth? There are a few key drivers. One, the IFAST Global Bank turnaround. This is a big one. IGB, which was acquired in 2022, actually achieved profitability in late 2024, and it's continued to be profitable throughout 2025, reporting a profit of $1.70 million for the first half of the year. The best part, management expects IGB to be profitable for the entire year of 2025. This bank isn't just a separate entity. It's designed to deeply support their wealth management platform, providing a funding base and attracting new clients. It's a powerful synergy. 2. core wealth management platform. This segment is a consistent powerhouse for IFAST, continually attracting new assets and clients, evident in those record AUA numbers and net inflows we just talked about. The company even has an ambitious long-term target of reaching $100 billion in AUA by 2028 to 2030. That's a huge leap from $25 billion in 2024. 3. The Hong Kong e-pension business. While this project had a bit of a bumpy start, remember the revised profit targets we'll discuss, it's actually now contributing to profitability in Q2 of 2025. The company is putting significant resources into it, and it's expected to strengthen even more in the second half of 2025. Think of it like a huge, complex software rollout. It takes time and investment up front, but the long-term potential is massive. 4. Other strategic moves. IFAST isn't resting on their laurels. They've also secured a trust business license in Singapore, allowing them to offer even more wealth management services, and they've gained direct access to U.S. stock exchanges for their U.S. subsidiary. Plus, they're developing Bond Supermart, a bond marketplace for individual investors globally. They're diversifying and expanding their reach. Now, it's not all sunshine and rainbows. Every company, especially when growing this fast, faces challenges. And IFAST is no exception. The Hong Kong e-pension project glitch, this was probably the biggest negative news event for them in 2025. After their Q1 results, IFAST had to reduce its 2025 profit target for the Hong Kong segment due to higher than expected operating expenses for the e-pension platform onboarding. This led to a 12% share price plunge. But here's the context. Management explained this as a strategic investment to ensure smooth execution of a massive long-term project. They still expect the Hong Kong segment to show substantial profit growth this year and double-digit growth in 2026. So it looks like a temporary strategic cost rather than a fundamental flaw. Valuation concerns. If you look at IFAST's price to earnings, or PE ratio, it's pretty high at 31.8 times. This is significantly higher than the average for many companies in Singapore. Some might see this as a warning sign. However, analysts often attribute this high PE to the company's exceptional earnings growth. Think 77% last year alone and a massive 139% over the past 3 years. Plus, analysts expect their earnings per share to keep climbing by 21% annually over the next 3 years, way faster than the broader market. So the market seems willing to pay a premium for that kind of growth potential. Macroeconomic headwinds. Like many global companies, IFAST isn't immune to broader market volatility, things like tariff threats and global economic slowdowns. Their China operations, for example, have continued to report losses due to things like the property market downturn and weak consumer sentiment there. But despite these broader challenges, IFAST has still managed to achieve record AUA and healthy net inflows, showing a degree of resilience in their business model. And ambitious AUA target. Remember that $100 billion AUA target? Some analysts have suggested that to hit such an ambitious goal, IFAST might need to consider acquisitions, even though the company says it's focused on internal growth. This is just something to keep an eye on. So, given all this, what does this mean for an investor? IFAST clearly fits into the growth stock category. This means you're investing for their future earnings, which is why that PE ratio is higher. The pros, you're looking at consistent double-digit growth in profit and assets, a successful digital bank turnaround, ambitious long-term goals, new strategic expansions, and a largely positive outlook from analysts. Plus, they've been consistently increasing their dividends, which is a nice bonus for shareholders. And there's high insider ownership, meaning management's interests are very aligned with yours. The cons, the main one is that high valuation. You're paying a premium for that growth. And there could be short-term bumps, especially with big projects like the Hong Kong e-pension. The bottom line is, IFAST appears to be a suitable investment for growth-oriented investors with a long-term horizon. They've shown a proven ability to grow their assets and turn new ventures profitable. While there's always short-term volatility to consider, their long-term potential looks significant. So that's a comprehensive look at IFAST Corporation and its impressive run in 2025. It's a company that's demonstrating strong growth while also managing strategic investments for even bigger future gains. What are your thoughts on IFAST? Do you prefer companies that are already well established, or do you like the idea of investing in a growth story, even with a bit more volatility? Let me know in the comments below. If you found this video helpful, please hit that like button, subscribe for more in-depth analyses, and don't forget to ring that notification bell so you don't miss our next video. Thanks for watching, and I'll see you next time.